They usually go under 10 cents, find a little bit of support, come right back up to the whole dollar. Sometimes they bounce over the whole dollar mark. For example, in this case, we'll be dipping under the $20, going to 19.90, and then finding a little bit of support there, coming right back up to the 20, probably hovering around 20, 2010, 2012, and then if that area sticks with that resistance, then rolling over all the way down to the 1990. And everyone, it's been a couple of days since the last time I brought you a video, and I am sincerely hoping that you guys have been great. Over the last couple of days and months, there have been a lot of opportunities in the market, and one thing that I want to just talk about in this video is how sticking to what you know and what you have seen you're good at would definitely serve you as profit, if you want to call it that way, instead of trying a million things that you have not tried before in a live account. So you notice right here how I have a prior trend line, or a trend line here for a prior low at $20.14 on the AR. Started to keep an eye on this one. This is one of the stocks that many of the guys in the free Discord know that I trade a lot. This is energy sector. We have seen Occidental Petroleum and a lot of other names in the energy sector, oil and gas, moving over the last couple of days. We've seen an average price of gasoline spike, and we have seen how inflation, quote unquote transitory inflation, is actually hitting everybody's pockets, right? So today I took a trade on a couple of names, and one of the names was HUT, which that didn't really pan out as I wanted to. PHUN, it was pretty decent right out of the gates, but then it just rolled over and it just flushed. I just covered my position here. I took a short trade on this name right under the view app. I was looking for a little bit of a washout. The first time around, you see how we had a little bit of an accumulation zone. We dipped onto the view app here, reclaim, and then we had a little bit of a resistance point right here around the opening price of today. Change your character right there, dip in onto the view app again, and then bouncing right to the view app, finding a ceiling there to then wash out and come back to the prior low, which I had here at $20.14. I just covered my position, and I was looking to film this video right now at midday. You see how I got yellow trend lines here, a couple of them. Yellow trend lines for me are identified as a prior low and an intraday level. When you see a white trend line, those are the ones that I use for daily levels, right? I want to show you here how, for example, these things actually work. And one of the things that I definitely like to recommend to you guys is to stick with the patterns that you can easily recognize, and things that you have seen in the past that give you a percentage point of profitability that actually serves you for your benefit. At the end of the day, here we all here trying to better ourselves. See how this thing it's basing out around the 2005, 2006 here. This little bit of an accumulation zone here, getting absorbed this level here, and 2014, which was prior support, now becoming this little bit of resistance. If this thing actually holds here, we can see the break under the low of 2006 here, which is the base, the low of this range, and then this little flag formation will probably resume this trend for a break under, go under probably the $20 mark, probably to 1990, or any of that area. Let's see what's the prior low on these candles here. If we could do that, and if we don't find support, we'll probably retest this area. Like I said, 1990, you see 1995 right there, 1994, 1991. Usually I've noticed this pattern that when stocks dip a little bit under the whole dollar mark, they usually go under 10 cents, find a little bit of support, come right back up to the whole dollar. Sometimes they bounce over the whole dollar mark. For example, in this case, we'll be dipping under the $20, going to 1990, and then finding a little bit of support there, coming right back up to the 20, probably hovering around 2010, 2012, and then if that area sticks with that resistance, then rolling over all the way down to the 1990 and following through to the then half dollar area, which will be 1950, if that actually pans out. Well, I will show you here how HUT, the trade that I took, didn't really work out too well for me. It was a little bit early, and I stepped out there for a small loser there, but sticking to the patterns that you can recognize, and sometimes sticking to being less is type more, it's better, because if you stick to one name and you look at the pattern, the behavior, and you start to recognize something happening, then you might be able to identify and jump at the right time frame so you can take advantage of the opportunity. But if you start running every single scanner and start jumping on different names here, there, and just chasing the next rabbit, not paying attention to one thing, chances are you're going to miss out on a lot of opportunities, because you're going to start looking at everything that is moving, and you will not look at the behavior on one thing that it's probably telling you a story of. That's what the price action might end up doing next, right? So sticking to less probably will be the best thing for you. If you want to keep on talking and sharing ideas with us, I'll definitely recommend you come to the Discord group, which is free, and you find a link for that in the description of this video. You can come through as well, and also join the Discord, not the Discord, I was trying to say the Reddit Traders Colony Reddit community, which is also free. Come and share ideas with us. We are looking for people that will actually give us and share ideas with us, and that will be a benefit for everybody in the community. So HUT, real quick here. So I jumped on HUT when this thing reclaimed the view out spot right here. You notice how it was hovering. There's a little hammer formation here. It popped on top of it, and it was able to break the high of this candle, but not too long. 1250 half dollar right there, 1251 and a 1252 dip, and we have a hammer here, and then we have an inverted hammer here. So we printed a small base right here for this support, and then we pushed right on top of the view up again to come very close to yesterday's and the close and today's open. You can see this dash and this little dotted blue trend line or line. So those are identified. Those two things are yesterday's close and today's open. You can see how this area was the resistance, and we have a doji formation right there. So basically there was a change of character here in HUT. I was looking for the push to come down, hold the resistance, and then come right back up to retest the 1279. As well as you just notice how I had AR prior low. When I look for an entry on a stock, either long or short, I always want to put a trend line or the prior low or the prior high to see where I am looking to start taking something out. I always like to start getting paid, taking maybe a quarter, a third, sometimes even half, depending on the price action on the stock or the prior areas that are easily identified. Oftentimes, things pan out. Other times they don't. But today, HUT didn't really serve me too well, and I ended up getting out of that name for a small loser, and then decent winner not winner, winner on AR stock. So I just wanted to bring you this video here. It's been a while since the last time I made any type of recording recap, and I just wanted to talk to you for a minute. I hope this video found you well. And again, if you would like to keep talking and sharing ideas with us, come and join the Discord. It's free. You can also find me on Twitter, Trace Conley, and the Reddit community is also free. So I hope you guys enjoy the rest of your day. Stay green and happy trading to everyone.